portfolio across the board, most of them are going to have lost money over the last couple of days.
Tell us what is your views on gold?
Doesn't do anything. Well, over the long term, a residential property is going to be a much more...
Like in 1915 it was.
When I was a lad, yes, it's indirect gearing. It is a much higher risk investment.
Is it the stock market or the shock market? It's at free fall at the moment.
A $50 billion bloodbath.
Point to a 4.3% loss today, marking its largest one-day decline.
Nearly $150 billion was wiped off the ASX.
And today we're very lucky to have Simon, who's head of S Financial Planning. Simon, welcome.
Welcome.
Tell us what's happening with the stock market.
Well, it's up and down. Just a little bit more down at the moment than usual.
How much are we losing over the last week or so?
Well, Monday morning we opened $150 billion down on the value of the total stock market. It's about lunchtime now, and it's made back about a third of that.
Right. Simon, you have a lot of clients, and some of them have shares, some of them have property, some of them have both.
Most of them have both.
Tell me, how is it affecting those clients with the share portfolio at the moment?
Well, the share portfolio across the board, most of them are going to have lost money over the last couple of days. Probably about 8 to 10% of the growth investments, the Australian and international shares. Those that are invested in something that's more of a balanced portfolio will probably be down about 7%. Into account the property portion of the investment, that's a lot safer. It's not going to be valued every day, so it's not going to be as volatile.
Yep. Look, everybody knows, and I don't hide this, I prefer property to shares. You have a lot more balance. You prefer both depending on the clients, correct?
I definitely see the value in having diversification.
100%. Okay, so what does it mean if a client wanted to retire today and the market's dropped by X amount of dollars or a certain percentage? They'd have to postpone that, wouldn't they?
Look, there's a few strategies that we can put in place so that that's less of an impact, but it's going to feel like it.
Yeah.
It's going to feel really like it. If you've got to the point where, today or middle of last week, you had $2 million sitting in superannuation and you said to yourself, great, now we're generating $100,000 a year in income. Today, it looks more like $90,000 a year in income.
Wow.
So you've got two options: either retire thinking that you're going to be able to do less, or try and build it up. The stock market will come back, always has. Just a matter of time. It might take a week, it might take a month, it might take 10 years.
Yeah. And you know what? The stock market has always bounced back.
Always has.
Yeah. Which shows you one thing, that whether you're looking at property or share market, it should be viewed as a longer term investment.
Yes.
Would you agree?
Absolutely.
Now, being a property person, setting up a self-managed super fund, having a property in that, it's somewhat insulated, isn't it, to the shock markets?
Well, yes, it's a great way to diversify. You can use part of your superannuation to put a deposit on a property. Your exposure to the property market then is the entire property, but you've only put in a small portion of it. If you've also then got a share portfolio as well, then you're growing both investments. The benefit of having the property is that you get to use gearing, which if you were gearing in the shock market, you'd be having a lot more shocks today, because that sort of thing is a lot. When you look at property, you're sort of getting your gains on the additional money that you borrowed. You wouldn't want to necessarily do that in shares.
No.
But having the ability to borrow money for a property, which is a lot more stable in its valuation over time, at least from a valuation point of view.
The thing is, whether the shock market goes up or down, people still need somewhere to live. As people still pay rent. So if you do have a self-managed super fund and you've got a property in that, it's not going to be affected by that. People will still pay rent, and it'll go up over the long term as well.
Yeah, nobody's going to tell you what your valuation of your stock market of your property was this morning, as opposed to this afternoon. But it's also a lot more stable. Over the long term, a residential property is going to be a much more stable investment with less volatility. And the gearing factors in property help it actually perform generally better than a share market investment. Although, stick with your shares; anything that you've already got will probably.
Let me ask you that: We hope you're enjoying our educational and inspirational videos. But if you're paying off a mortgage now, why do you have to wait 25 to 30 years to pay it off? And if you look at the word mortgage, mortgage is a French word, mort gage. Mort means death, and engage. It means engage till death. That's a 25 or a 30 years life sentence. If you like to pay off your home loans, click the link below. We'll send you a free ebook to show you how to do that, give you a little bit more freedom, a little bit more flexibility for you and your family's future. Well, everybody knows that you can gear into property. Can you explain to the viewer what gearing means very, very simply?
Oh yeah, simply put, gearing is just borrowing money in order to make a bigger investment. Now, it's what most people do when it comes to property. You put in a deposit, you borrow the money, you're gearing.
Yep.
It's as simple as that. You're ratcheting up your investment. You're putting in a little, but getting a much larger return. If you were to buy a $200,000 investment property and it goes up 10%, you're going to make 10% of $200,000 or 20 grand. You also get the rent. If you use that $200,000 to buy $1 million property that goes up by 10%, you make $100,000 out of your 200. So you've just created a gearing where you've actually earned 10 times as much, and it's cost you a little bit more in expenses. But over the long term, if you continue to make a 10% return, you're going to get a much better return out of your 200,000 than if you just bought a single property for the 200,000.
Exactly. So I suppose another word for gearing is leverage.
Leverage is a real
Leverage
thing.
is using something small to move something big, like a lever. I think it was Archimedes that said, give me a lever long enough and a place to stand and I can move the world. So gearing and leverage pretty much means the same thing. Using something small, maybe $100 a week out of your own pocket, to move something big, which might be a $700,000 or $800,000 property that you wouldn't necessarily be able to move for $100 a week. Why does leveraging work? Because you've got the tenant and you've got the taxman helping you pay for that.
Absolutely.
And
Even in super, the tax man's help.
it does 15%.
It's a smaller amount, but it's good.
How many of your clients actually gear into shares?
At the moment, zero.
Zero. Okay, so whatever they invest is basically a
Pretty much it. There's one client actually that has a geared share fund, but it's not direct gearing. It's indirect gearing within the share fund itself.
right.
But that is a much higher risk investment.
Yeah.
That one will have gone down more
Yes.
than the general market.
Yeah. So thanks so much for that. Look, I suppose what it tells you guys is that diversification is very important. It's extremely important. So yes, have some money in shares, have some money in property. In property, you can have it inside superannuation or outside superannuation. And a viewer asked me about gold as well. Gold is also a good investment. It's done tremendously well over the years. So as I said, don't put all your eggs in one basket. Would you agree with that, Simon?
Yes, maybe not so much with the gold, but okay.
Tell us what is your views on gold?
Doesn't do anything. Like in 1915 it was, when I was a lad, yes. No, look, gold is going up. It's also seen very much as a safe harbor, a hedge against inflation.
Yeah.
It doesn't produce an income. So as a long-term investment for somebody who's looking to retire, unless you're planning on cashing parts of it out, it's not going to produce something. And if you're having to use the capital, then you're having to take your profits. It's nice to be able to have an income generated from something as well as the profits.
Look, I'm glad we kind of had this argument about it because it shows you a couple of things. A, diversification is important, but also I feel that you should invest in an area where you feel comfortable, because investing at the end of the day, you should be able to sleep well at night. Would you agree with me?
Yep.
There's no use in investing in an asset class where you're going to have kittens at night and worry about, should have I done that? Is it the right thing to do? Because I think there's more to wealth than just money. It's having a peaceful life, a contented life.
If you can't sleep at night, it's the wrong investment.
100%. So that's a little bit about the stock market. Comment below what those people that have invested in the stock market, how's it performing for you? And more importantly, comment below, how do you feel about what's happening with the stock market at the moment? Follow me for more. Press like, follow, and all that. And follow me for more. Press subscribe and keep up to date with all the videos. Thank you.